What's up, guys? Welcome to your Bitcoin update. We're going to be taking a look at the charts today. We're going to take a look at both the bullish and the bearish case scenario. We're going to be looking at Wickoff and Elliott Wave. Both of them can go together and we can figure out what's going on in these charts. So definitely stick around for the whole video. Don't forget to subscribe if you haven't already. Smash those thumbs up. Take a second out. It only takes a second. And leave your comments down below. Now, what we're going to talk about is there's two different schematics for the distribution phase in Bitcoin. Last time we hit the schematic one, but we looked at both. This video is from March 24th. As you can see, we looked at the bearish case and the bullish case, showing one more leg up. And this is what we got. This played out almost exactly. And we're going to take a look at what's going on right now and see how much this resembles it. Now, you're going to want to stick around to the end of the video to get into the smaller time frame. We're going to look at the 4 hour. That's my favorite time frame. We're going to break down what I'm going to show you prior to that and see what's going on there. Again, we'll be looking at both bullish and bearish case scenario. I'm leaning towards the bearish case overall, even if we got another high up here. But let's take a look at it. First, I want to show you, this is my Twitter. Definitely give me a follow if you haven't already. It's at CryptoSavvy1 on Twitter. I posted this on November 11th. As you can see, that target hit almost perfectly. I don't go on Twitter a whole lot. Every once in a while, I go on Twitter binges, but I'm not on constantly. But if I see something, I will definitely post it on there. If you are rude and obnoxious, I will just block you. I don't like to deal with negativity, but I don't have a problem with opposites of opinion at all. Just idiots. Okay. So let's take a look at it. So if we were to get another up thrust after distribution up here to the $70,000 to $75,000 range is possible. We've talked about this for quite a while as a possibility. We drew this fractal in here, and if we put it over to here, it would get us up to that 70 to 75,000. That is the bullish case, in my opinion. And I'll show you an Elliott Wave count that could get us up into the 80 to 85,000, which I don't think is very likely. And I definitely don't think that we're going to see 100,000 this year. You know, a lot of people were saying we're supposed to see 300 before September or by September. Then they changed it to 100 by December, and now it's 100 by next year. Whatever, we'll see what happens. But anyways, we came down to this last point of support, and right now we seem to be bouncing back above it. As you can see, we got a little wick below here, but we did not come back down this time and test the sign of weakness down here, which is the SOW. This time we almost did, but this is right around 61,000 is where this lies. Now, there's a chance we could just continue down from here, but we'll take a look at that here in a minute. But anyways, if it is going to do that, then we should break back up above this 67,000. And then we should break our up thrust just a little bit and then come back down if this was to play out like this again. And that would be this schematic here, which is right here, as you can see. Again, it doesn't play out exactly line for line, but a lot of people just don't understand that when we put targets up here, it doesn't mean it shoots down straight in a day to these targets. There's lots of bounces. People take profits. People get into trades that makes markets move. So anyways, but this is what we're looking at as a possibility here, right? And as of right now, we would be in wave B, which is in here. We would probably be somewhere right around here. Get that next leg up. Actually, we'd be somewhere around in here, and we'd be looking for this next wave up to make another high if this was the case. Now, in the bullish case, here's that bullish wave count. I know a lot of people are saying they think this is wave 1, and then wave 2, and then wave 3 and 4, and we're working on 5. And this would be wave 3 getting up to about 78.3, 78.4, back down to around 57,000, and then all the way back up to 83. Now, like I said, I don't personally think that's going to happen, but it is a possibility. Something you want to look at. Always do your own due diligence, make up your own mind. Never trade off anybody else's trades or whatever, because you're guaranteed to lose your ass, because There's a lot of stuff that goes on in trading behind the scenes, and I don't think a real trader is going to sit there and tell you every little move to do. That's just too time consuming, and it is what it is. But anyways, definitely don't follow anybody's trades blindly. Always start to learn what you're doing and make it make sense with your analysis. So anyways, and this is the other avenue that we could take, which I think is a good possibility, would be the direction we're headed, which we already went up to our up thrust up here, came back down to our SOW, sign of weakness. And if we do get a bounce here, we could go up to, like I said, that 66 to 65,000 range for wave 2. But I still think we have a little bit further to go, and I'll show you that in the Elliott Wave count. But let's take a look at what's going on. But eventually I do see us going back up to the 65 to 60,000, although I think we're going lower from here, and I'll show you why. We'll dig in a little bit into the 4 hour, and here is why I stayed bearish, guys. If you guys followed my channel from the last dump we were calling over here, we had our 5 waves down. We had these 5 waves measured, although I thought the 5th wave was going to go down a little bit further. But all the 5th wave has to do, these moves right here, we called almost to the T. This one only, the wave 4 went to like 41.4, and I was calling for 41.7. But either way, and wave 5 I thought would go down a lot more. But all that wave 5 has to do, and if I move this stuff out of the way, you can see the wick here. All it has to do is break wave 4. And then we started our B wave, which should be a 3 wave structure. 1, 2, 3, an ABC. That's making this whole thing a big ABC. If you guys know anything about Elliott Wave, that will make sense to you. Now, a lot of people say you can't have 5 waves here. It has to be 3, 5. That's incorrect. It can be an irregular correction, which I do believe this is. And if you know, the whole time I was looking for an ABC correction, although I thought we were going to stop somewhere around 57,000. And then continue down, but we did get to break that high, which is basically like a stop hunt of this high up here, I think, to trap bulls. Again, this would get invalidated above that 75,000, in my opinion. That would invalidate this count. Anywhere in this red zone would be iffy, but I do think it is a possibility. We're done here. It's possible. And this being wave 1 down to approximately 51 to 53,000. As you guys know, I've been talking about that for weeks also. And then a bounce from there, maybe back up to, like I said, that 65 to 66,000 range being wave 2. And then 3, 4, and 5. 5, depending on where it breaks, we could probably take a measured move off this wedge if it does do that. Let's say it breaks down over here in the middle of the 3rd wave. That would be somewhere around 57,000. If it broke there, it could possibly go down all the way to 26, 25,000, somewhere in there. We'll see what happens. Definitely want to watch this trend line right here off of these wicks. Now, yeah, like I said, 5 waves down. That was this A. And then if we look for B. And again, guys, hold on just a second. We'll be going into the 4 hour and breaking this wave 1 down here, also looking at what it would invalidate it. So this here, this ABC, B would have to be 3 waves, and this is 3 waves, ABC. 5 waves here, right there. There's 5 waves for the A, and B right here, 3 waves. That's a 3-way structure, no denying it. And then 5 waves here for the 5th wave, which would be the C, and then we'd look for 5 waves down. Now, how I have this measured out is I'm thinking right around the 51 to 53,000 here. You might want a long in that area. Should get a bounce off here. Make sure you use stops, but should get a bounce here to 65 to 6,000, somewhere in that range. And then I would what I'm going to do is short that, and actually, I'll have my stops in above this high here. I'll probably start laddering in low leverage shorts up in here. And when this breaks, I'll probably short pretty heavily. And that, if it plays out the way I'm expecting and measured, it's about 35,000 to 36,000 this wave 3. And then we'd get a wave 4 up to about 47,000 at 45 to 48, depending on where this goes. We'll measure it out as it goes. This is just speculation right now, but then possibly down to, like I said, that 25 to 30,000 range. Definitely a possibility, guys, if we don't break these highs up here. So keep that in mind. And let's, oh, if you guys are interested in trading, definitely check out Prime XBT, by far my favorite exchange. They don't trade against you. I took all the other exchange links out down below because I just don't trust any of those exchanges. It's the only one I do. They are legit. They are B-book, meaning they don't trade against you. All the other ones are A-book. You can look that up. Just Google what's the difference between A-book and B-book exchanges. You make the decision. A-book exchanges trade against you. The only way they win is if you lose. B-book exchanges only work on commission, so they don't trade against you because they don't have to keep pulling people in to liquidate them all the time. So anyways, crypto, you can trade crypto, Forex, gold, silver, S&P, oil, Dow Jones, tons of stuff on here. Definitely check it out. All you have to use is your email to get an account. You can use my promo code SAVVY50. That'll get you 50% on top of whatever you deposit as a bonus. Savvy25 will get you 25% off your fees. There is a tutorial right here on my YouTube page. Definitely check it out. It shows you how to calculate your leverage and where to put the promo codes. So the link's down below also. And this is what I was talking about, the breakdown of that wave one. If this plays out the way I believe, this will all be one big wave one. Like I said, to 51 to 53,000. Now, we should get a bounce for the third wave around 55,000, somewhere in that range. It's not exact, guys. And then up to possibly test the 60,000 again after that, and then back down to that 51 to 53,000. Then this would be wave one. And then we would look for that two wave that I showed you in the bigger chart. And that two wave is going to get everyone bullish, everyone calling for 100,000, saying this is it, this is the rally. That's the way I see it playing out. Could I be wrong? Absolutely. But this is my opinion. I do believe this is what's going on here. Some other things I want to show you here. Let me get that out of the way. Is last time, this purple line right here is a 200 EMA, and we're on the 4 hour. Everybody's saying that the 4 hour is oversold on the RSI. Well, let's go back to last time. The last high when we broke the 200 EMA, right? Let's check that out. Let's get over here. And last time we broke the 200 EMA was right here. Look where the RSI was, way down here. We got to bounce back up, tested that 200 EMA and came all the way back down. Not saying it has to play out exactly like this, guys, but this gives you an idea. Just because that RSI is way down here, it can just make a small move up and then continue down much lower, and then making a bullish divergence here. You're getting higher lows on RSI, lower lows on a price action, showing you wave two was coming. And then you get your wave two up here, and then we got wave three after that, the big one. Now, let's take some measurements here, just out of curiosity. So from this high to that 200 EMA break, that was about 11%. Let's go back over to where we're at now. Let's go from the top of that. And again, guys, this is just showing you the similarities. Doesn't mean it has to play out. But that's 11% too, right to the 200 EMA. Now, let's take a measurement. Well, we got to do it over here first because that's where it happened, right? So let's take a measurement down from that. So if we go from where it broke all the way down to where it bottomed here, that was 18%. Let's just see where that is. And again, that doesn't mean it has to do that, but let's see where that is. 18% here would be all the way down to about the 50,000. Not impossible, but like I said, I'm looking for that 51 to 53,000. We'll see what happens. I will keep you guys updated on this. But as of right now, it is still looking like we have more downside, guys. Now we can bounce around in here. We can, come down, bounce back up, retest that 62,000 again before continuing down. But ultimately, this would still be a wave three that we're forming here, unless of course we bounce from here and this goes up to past that 66.3, then that will invalidate the wave 2. Now, and again, this is on the smaller time frame. These are 5 waves, but it's 5 waves of wave 1. I hope that makes sense to you. I don't know how else to explain it. It is what it is. So if the RSI was to do that, the RSI can come back down further. Maybe that 55,500, 55,600 on here in the RSI, then move back up, and then we get our bounce back up to this 59 to 60,000, and then make another low, but a higher low for this wave 5 right here. So the wave 4 would get us the bounce in the RSI, and then we should get some bullish divergence when we hit this 5 compared to this over here. So that's what I'm looking for. We'll see what happens. Oh, another thing I wanted to point out. Now, for the bullish case on this move, we would pull out the Fibonacci extension, go from the swing high to the swing low, back to the next swing high here. We did hit the 1-to-1 extension right here. Now, if we break back below and close 4 hour below that, that pretty much is going to confirm that we are in wave 3. But again, like I said, we could get some bouncing around first. Doesn't mean we have to go in one straight candle, guys. This is on the 4 hour. If you go back over here, you can see all of this took a lot of time. It wasn't straight down or straight up. That's just not how markets work. So if you think it is and that's how you're trying to trade it, you will get wrecked. But anyways, that is what I'm looking for, guys. I appreciate you guys stopping by. Don't forget to subscribe, smash that thumbs up, leave your comments down below, and check out my wife's webpage, inkyorimage.com. That link is also below. Definitely check it out. She's got a lot of cool stuff on here. She's got a crypto section, a lot of great gift ideas. Definitely check it out. It's quality stuff, guys. I appreciate each and every one of you for stopping by. Take it easy. Have a great day, and I will see you tomorrow.